Central bankers knew what they were doing nearly a decade ago when they devised a strategy that would prop the global economy with record stock prices, and intended product of this strategy as a means of bolstering sentiment. But now the strategy has been exhausted into the sunset, ushering in a new dawn of the less investor-friendly policy normalization process. The infancy of this process was shrugged off with very little change happening, and interestingly enough, because of this, perhaps lulling investors into a false sense of security that the reversal of monetary policy wouldn't be such a suffocating process. But we are now moving out of the infancy stage, and it's all getting a little more complicated, with rates starting to move up more than just once in a blue moon, and inflation proving to be something that actually exists. These are harsher realities that all of a sudden have many investors running for the exit doors, with last week's more hawkish Fed leanings and jump in U.S. hourly earnings, and this week's Bank of England decision proving this more unsettling transition in the policy normalization process out of infancy. As we highlighted in our Thursday closing call, the message is clear, and if you've watched Game of Thrones, that message will be ringing with familiarity. Investors, be warned, inflation is coming. And that wall of support that has been there all this time to keep you safe will no longer be able to protect you. As we head into the weekly close, stocks look to be getting back to reconsidering that move to the exit doors that we had seen last Friday and at the start of this week. This is where all of the focus will be. Investors may manage to once again escape the grasp of those white walkers that are inflation, but they are running out of hiding spots, and whether they like it or not, inflation is coming. Looking at today's releases, we get UK industrial production and trade, UK NIESR GDP estimates, Canada employment data, and more US government shutdown drama. The US dollar has been bid up overall in the face of the discussed developments, as they both encourage safe haven demand and warn of rates rising faster than anticipated. At the same time, the overall trend has not been running with the buck, with the added variable of U.S. administration soft dollar policy less familiar to currency traders, inspiring an added degree of reluctance and tentativeness towards getting too aggressive with dollar bullishness. That's all for now.